Welcome to the VUCA Insights podcast, where we bring you insights to the world of investing, entrepreneurship, and growth mindset. Our guest today is Shinya Deguchi, founder of Star Magnolia Capital Limited. We spoke about his foray into the fund management industry, starting with his experience at Melco to being director at Cook Pine Capital LLC, and eventually the founder of Star Magnolia Capital Limited, a multi-family office fund based out of China. From there, we spoke about the key objectives of a family office, criteria of how he screens for the best fund managers in the world, incentive structures to achieve alignment with the participating investors, and how he's nurturing the young and opening their world to professional fund management through a vehicle called the Gen Z Club. Lastly, he also shared his experience working with David Tepper, a renowned hedge fund manager and founder of Apaloso Management. Enjoy my conversation with Shinya Deguchi. Hello everyone and welcome back to episode 4, I think, of the VUCA Insights podcast. And today we have a very special guest. All my guests are special, but this one is extra special because he's flying off tonight. He's actually a Japanese investor, but based in China. He runs a multi-family office, and if you guys don't know about it, I'll let Shinya explain it. But first and foremost, let's welcome Shinya to the show.
Well, thank you very much for interviewing me.
Yeah, most welcome. Thank you so much for spending your time with me. I think perhaps I'll start with some appetizer questions. What was a 15-year-old Shinya like, actually?
All right, interesting questions.
Yeah.
At the age of 15 years old, that was the year I went to United States for the first time. I was dreaming about United States.
Okay.
But I didn't know exactly what the United States will look like.
Okay.
But then that visit changed my life.
Okay.
So the city I went is called Columbus, Ohio.
Oh, Columbus. Okay.
Which is in the middle of nowhere. And then my father's friend living there with her husband.
Okay.
I spent, I think, 3 weeks of my summer break.
Okay.
It was eye-opening. I realized US was huge, and then open. Mm-hmm. So they took me to Walmart.
Oh, okay.
And I was like really shocked at how big the scale was. Mm-hmm. And then they also took me to a restaurant called Hooters.
Oh, Hooters, yes. Okay.
So I was like, wow, that's United States.
Especially from Japan straight to the US, right?
Exactly.
Yeah.
So then I thought, oh, wow,
okay.
Maybe I should come to the United States.
Yeah. And were your parents supportive of you? Because in your blog, and I'm going to put the link to that particular article, your family was based in a region where it's very famous for beef. Your father was a pharmacist. Was it already kind of like a typical Asian culture? The son has to come back and take over the business. Was that imposed on you in a way?
Not really. So
okay.
I didn't like chemistry.
Okay.
I didn't like biology.
Okay.
So it was very natural for me not to become, to take over, our family business, which is drugstore.
And so when you were so amazed by the US, and then you had relatives, family members and friends there, was your family actually encouraging of you to actually go outside and all that? Was it?
Yes.
Okay.
And then you probably remember Japan went through the 3 decades of economic slump.
Correct.
Which is still ongoing.
Yeah.
And then so I was born in 1980, and then at the age of 10, Japanese economy had the peak.
Okay.
And then it was a continuous decline. So I saw this decline, and I realized, wow, the economics is actually very important for us to understand. And I wanted to understand why Japan was going through this slump. And then is there any solution for this? And then I still remember, for the entrance exam of my universities, I have to submit the essay. And the essay was titled, How I Can Become Doctor of economies. So doctor means I wanted to fix the problem of Japanese economies, which I don't care right now. But then I was very naive that maybe one day I can learn this economics, study economics, and then bring this concept back to Japan to fix the problems. And then my parents are pretty open for me going to United States. They actually encouraged.
And on that topic, was that what piqued your interest about economics? Was this just your curiosity or observation? Because I mean, you grew up in a family of drugstores or pharmacies, right? Obviously, you would have been exposed. I'm pretty sure your dad would have brought you to the drugstore and all that. But what was your trigger point? Was it a mentor in school? Was it some reading that triggered your interest into economics? Because that's what you majored in, right?
Right.
Yeah.
So I'm pretty sure my visit to China at the age of 12 and 13 years old had significant impact on my way of thinking.
Okay.
So the Japanese economy stalled.
Okay.
After 1990.
Okay.
And then, but I went to China in 1993, and I had a grand tour of China. And then I was actually very shocked how poor the China was. It was a culture shock. But then I actually saw the kind of the great hope and excitement in people's eyes.
Okay.
Because the economy is growing and they are becoming richer and richer.
Okay.
The sharp contrast to the Japanese economy.
Okay.
And then that's when I started probably realizing, actually economics is actually very interesting study because I can see and then compare the different economies and then why some economies are having a difficult times and then some other economies is having a very good time. And then the United States is kind of a mecca for the study of economics.
The capitalist. I mean, everyone wants to live the American dream, right?
Right.
Yeah. And because of China, and you went back, and I think one thing in your blog that you also saw the rapid development rather than just the hunger. It's like you went to Shanghai one time when you're young, and then you went there. What do you think were in place in China that actually manifested this, and what was missing of that in Japan actually? I mean, what did the Chinese government policies made it as a catalyst to grow, and what was it lacking in Japan? I mean, from your experience.
So back then I didn't know. And then I actually didn't know, and I just thought, wow, it's interesting to see the differences between China, Japan, and the later United States. And then, so I still do not know what exactly caused the differences. But then clearly back then I had no clue.
But it piqued your curiosity to wanted to know more, and that's why you ventured into economics. Right. Yeah. So now you've graduated George Washington University and you were looking for a job and you found a job with Melco. So maybe guide us through what was your experience in Melco like, and what does Melco do actually?
Yeah, so the Melco, probably not many people know about this company.
Yeah.
It's a listed company in Japan.
Okay.
It was the largest manufacturers of wireless LAN.
Wireless LAN on your PCs and all that, right?
That's right. Yeah. Then hard disk drive.
Okay.
And then if you go to Japan and then the computer stores, there's a brand called Buffalo.
Oh, okay. Yeah.
And many people know about this brand.
Yeah.
And then, so the Melco is a parent company of Buffalo.
Oh.
And then the son of the founder happens to be my very good friend at high school.
Okay.
We did the Japanese fencing, kendo, together. And then because he had a big house, we always had a party when we were high school students.
Okay.
But then the reason I really wanted to go to his place was not because of partying and then the playing and then the doing the stupid things. But then when his father comes back home, he's always generous to spend time with us. And then as a high school kid, and then there are not many opportunities to speak to listed company CEOs.
Yes.
And then he's very different from other adults because he's running a business globally. He was building a new business in the United States, and then especially Asia, it was growing pretty rapidly. So he always talked about his visions and then how he can build the global manufacturing business. So when I just right before my graduations, he said, "Well, we're actually trying to build the financing arm of the Melco." And then, so back then, GE Capital was a big business. Everybody admired GE and creating this, the financial arms. And then the Melco said, or maybe the CEO said, "Oh, I wanted to build the new finance business." And say, "Wow, manufacturing business doing finance, that's more interesting than the joining investment bank."
More interesting than JP Morgan and all that, right?
Right. Yeah. Of course, they probably didn't give me a job.
And why do you think, I'm even more curious because when you mentioned about Melco's executive director, chairman giving you the time, it reminds me of Yen Liao's story. When Yen Liao was in Australia, he actually had his best friend's father teaching him entrepreneurship and all that kind of thing. Why do you think he was willing to share? Was it because you guys were asking him the right questions? Because obviously, if no one was listening, I don't think he would have shared, right? So what, if you reminisce back with more wisdom today, why do you think he was willing to spend that kind of time?
Of course, I was a friend of his son. And then I think he's a very curious person. And he asked a lot of questions. And I was also eager to ask a lot of questions. So I think we definitely had a very good engagement.
I see.
And then I also like drinking.
Okay.
Even though it's illegal to drink underage. But then we enjoy drinking.
In his house, it's not illegal.
That's right.
So over a drink, then you guys discuss, rather than discuss about gossip, you guys discuss about investment ideas, which is even better.
Well, not the investment back then, but it's a business, because we didn't really talk about investing back then.
I see.
But then, so then after that, I went to school in US, George Washington. And then when he comes to New York, he always asks me to come up to New York when he's spending over the weekends, and we spend the weekend evenings drinking and talking. So that was a very precious time for me. So one day he actually told me, "Hey, why don't you come up to New York? Because I want to introduce you to someone very interesting in New York." And then that was the hedge fund managers. So he started becoming, being engaged with hedge fund managers. And then somehow he thought, well, maybe I will let this young Japanese university student meet those managers, which is unusual. And then, but then I had a great privilege to meet those managers. And then I was, wow, this world, I didn't know this world
existed, right?
Right. Yeah. And I was really, really fascinated, because back then, nobody really knew about hedge funds.
Correct.
And this is like 2001.
Early 2000. Right after the dot-com bubble, right? Yeah.
But then that's when hedge fund became more popular. Because a lot of people lost money, but then hedge funds continue making money.
And this kind of opportunities, do you think, is this very rare, either in the US or even in cultures like China and all that? Do you see like business owners or entrepreneurs actually opening their world to the younger generation? And if you see, why do you think they do that? If you don't see it, why do you think they don't do it actually?
It's still extremely rare. And then it's not because they don't want to do it, but then they just don't know how to find those kids.
I see.
As well.
I see.
And then the younger people also do not know how to find those patrons as well.
I see.
So I think there's a significant search cost, and then it's very difficult for both parties to meet.
I understand.
And find out.
You need a matchmaker, like a Tinder in between.
Exactly.
Yeah. Tinder for investors. Just kidding. Okay, so eventually it did not last very long in Melco, and you shared some of this publicly. The son eventually came into the business, and you had disagreements and some misalignments. I mean, if you could indulge us, what were those, and why did it felt that it was a little bit more petty that you should move on and all that kind of thing?
So I think the biggest reason was I'm too vocal. I control what I say. so maybe sometimes the people feel a little bit uncomfortable.
I see.
Right, and that's understandable.
Yeah.
Even though my partner Hiroyuki and I spent a lot of time together.
Yeah.
But then sometimes we became too straightforward to
Understand.
each other. Right?
Understand.
And then they also wanted to come back to Japan, and I said no, I don't want to go back because after they sent me to US after I only spent in Japan for 6 months.
Okay.
And then I was located in United States.
Okay.
So I found I think it's important for me to be in US at that time of my life because I can meet a lot of different people, and also going back to Japan, I feel it's like failure, right? And then since I came out from Japan and then I was building my life in the United States, why do I have to go back to Japan and then start it over again?
Yeah, and you found your eventual wife there as well, right? And you stayed. Was there a difference in the investing philosophy as well, in a way, when you were like building up this Melco's investment arm? Was that one of the disalignments, if I were to say?
So I wasn't very clear about what investment style I love.
Okay.
And then it took me a while to find out.
I see.
But then it was interesting time because the Melco and then with our partners, we invested in a lot of fraudulent hedge funds, like a lot.
Oh my gosh!
Right?
Okay.
And then I always said have jokingly to people that it's important to learn from the mistakes. But it's even better if you can learn the mistake at the cost of someone else.
Yeah, not your own cost, right?
Right.
Yeah.
But then it was very good lesson, important lessons for me. That yes, of course, it was not my own money, but then it was my company's money, right? And then I'm not sure it was of course my bosses, they picked the investments. I was like one of the most junior people, but I feel bad, right? And then I thought a lot that how it happened, and then what we could have done, right? And then one thing I realized was, wow, due diligence is extremely important, and then it's not just a checkbox, right? But then just do the due diligence so that you can find out the potential fraud or maybe loopholes or maybe kind of the gap in the minds and the operations, so that we can avoid those weak operations or maybe the potential fraudulent the mindsets, because the good managers, good investors, why they are good is because they know their weakness. Right? So they can actually create a system to prevent themselves from doing something bad. Right? So say for example operations. The good managers, they always have good operations, and they're very strong the operational number two.
Portfolio accounting, ordering system, all those kind of things, due diligence as well. That's what you mean by operations, right?
Right, exactly.
Yeah,
right?
yeah.
And then, so that it's very difficult for them to do something wrong, right? And stealing money from the accounts, manipulating performance, because there's always the third person watching them, right? And then, of course, they're not going to do anything wrong, right? But then the fact that there's no way they can do this. Right? And then that actually prevents from the worst case scenarios. And then the great people, great business people, it's not the matter of investors or not, but then if you're really good business operators, you set up the system so that you don't do anything wrong or maybe doing something against your investors.
And exactly. So that setting up of a custodian or a trustee system, that third party that you mentioned, right? If you get that right, the likelihood of error is much reduced in a way. Yeah.
So people usually want to have the greater controls and then flexibility and the freedom. And then having a third party, it sounds like it's an extra cost.
Yes.
Right? But then it's actually not, and it's very important for any investment managers, even some other the business owners, to have the extra layer of operational oversight.
Yeah.
And then so that we can continue to be very disciplined and then diligent about what we do.
Yeah, actually, it's interesting that you brought this up because I had a chat with some of the boutique fund manager friends that I have, and he was joking. He says even his fees has to go through the custodian, which for me it's a good thing because the trustee or the custodian there's a safeguard. There's like and we'll discuss more about this as we talk about your family office later about things like FTX. There was obviously, if you've read the transcript, there's like so much lack of operational governance and control and all that. Yeah. Okay. So then from Melco, you move over to Cook Pine and you spent about 6 years there. What different experience you had at Cook Pine, and what were the things that you probably broadened in terms of horizon?
Yeah. So this is when I probably formalized my investment philosophy.
Okay.
Which is investing in people.
Okay.
And then the trust in people.
Okay.
Well, it was an interesting experience because before I joined Cook Pine, I had a lot of experiences of investing in fraudulent managers. So it's easy to lose faith or maybe trust in managers. Like you can easily say, these guys are, they're fraudsters, or maybe, they're just, they're stealing money from investors. But then my boss at the Cook Pine, H. Kwana, he taught me that the best way to invest is actually invest in people. And then the question is, how can you actually find those people? And how can you actually trust them?
So what was if you don't mind sharing their methodology of screening or determining whether this is a good person? I mean, some of it may be trade secrets, I understand, but what were the probably key points of them making investments in people?
So there's no trade secret.
Okay.
And then we often say we want to do a good business with good people. Right? And then how do you define good? It's actually very difficult.
Yeah, it's very difficult.
Right? And then so you have to ask yourself. And then it was more like your gut is telling you what is good and bad. But then if you're dealing with bad people, you feel uncomfortable.
There's this niggling feeling that is like uneasy, right?
Yeah. And then very often the people make investment decisions based on performance. Right? And then if the manager is generating a very good performance and track records, and then you actually compromise on the quality of people.
I love that point.
Right?
Yeah.
And then so sometimes when we are looking at the managers and investment opportunities, I don't look at the performance. I look at the people, backgrounds, what they have done, and then also to speak to them and then see, to understand who they are and why they're doing this, right? And then how they do this, right? Then later on, I look at the performance, and then sometimes it's good, sometimes it's bad. But then I ask myself, can I explain how this guy or this lady generated this performance? Right? But because by the time after you're spending a couple hours with the person, like you probably know a little bit about this person and the history and then the personality. So you can imagine or maybe you can expect some the type of performance. Right? And then so this is actually very important training. Right? And then when we are investing in managers, right? This can we actually imagine this person how they can actually generate returns, or what kind of returns they can generate without looking at the past performance.
Okay. So you kind of use the qualitative aspects to kind of project forward how he can, based on qualitative aspects rather than the solely based on the track record. Obviously, track record, you have to look at it. It's just that the prioritization of the weightage is actually the quality of the person.
Because as the disclaimer always says, the past performance is not indicative of the future performance.
Correct.
And then it's absolutely true.
Yeah.
Right. But then the people still relying on track records because we usually don't have the imagination power for the future.
Yeah, and we don't have a benchmark for qualitative things as well in a way.
Right. But then the track record is more like a confirmation of your imagination. Right? And then if they don't match, right? Sometimes you know this manager is making a big bets, and then the performance should be brought out.
Okay.
Right, but then the track record looks very smooth. Then you see like, okay, am I missing something? And if I'm missing something, why is that? Is that because of me or because of the person?
I see.
Right, and then we can narrow the gap. Sometimes you just don't understand how the person actually generates returns. Then you should walk away.
Yeah. Actually, funny you mentioned it because Kevin, the guy we met just now, he was telling me Bernie Madoff's documentary is coming out today, I think.
Oh, interesting.
Yeah. So yeah, I'm looking forward to, because when you were mentioning about the returns versus the track record and all that, something just doesn't line up, and yet people poured billions into this guy. So it's a very interesting study of how psychology of people still look back at track record, and yet they don't find this mismatch. You see.
Yeah. So we invest in Bernie Madoff as well.
Yeah.
Right? And then if you ask me, would you invest in Bernie Madoff again if I have opportunity to meet him? Unfortunately, I probably say yes.
Yeah.
Because that's how good he is. But I didn't have a chance to meet him. I was too young to meet. But then I can easily imagine how influential he can be, and then the tricks that he used back then were very innovative. Right? And then those loopholes are now closed. But then those tricksters, they can always come up with the new ways to deceive or to hide the facts or maybe the realities.
Yeah.
So I do maybe a respect is not a good way.
Yeah.
But then and then maybe I shouldn't say admire. But then they're really smart.
Yeah.
Right. And then we have to be extra careful with fraudsters because they are very desperate. Right. Because if those frauds are revealed, and then they will lose everything.
Yeah.
Right. So they will do everything to conceal the misconduct. Right. And then if people at that kind of situations, they become very creative. Right, much more creative than the ordinary people. So we have to be extra careful, and then we have to be very good at and then also maybe rational.
Yeah.
And then diligent.
Yeah.
When we speak to those the fraudulent.
When you were mentioning about creativity, the first thing that popped out in my mind was Theranos. I used to admire Elizabeth Holmes because can you imagine cover issue of Fortune revolutionizing medical tech and all that kind of thing. But then what you just mentioned about due diligence, right? What you read in the headlines can be so surface, but you get carried away because of the story and all that kind of thing. And even she deceived the entire board, included George Schultz and all these very prominent people. And even the grandson of George Schultz was trying to convince him otherwise, but he failed, right, initially, right? So, yeah, thanks for bringing up that point. It's a very interesting point about how tricksters can be so creative and how you have to be rational in your thinking, which is not easy to do. It sounds so simple, but it's not.
Well, that's a very interesting point because the first time I came to Malaysia was I was actually invited to the panel discussions.
Okay.
Or maybe the event, the conference about risk management and fraud prevention in Kuala Lumpur. Right. And I was like, I feel like, okay, that's funny. Right? Because,
so ironic, right?
All the things happened.
Yeah.
But then that was like, probably 2015 or 16.
Okay.
And then I talked about my experiences with frauds and how to, they do a proper due diligence on those investments.
Great. Malaysia is actually very famous for all this. And yet today, they're still around. It just manifests in different shapes and forms, right? Yeah. Okay, great. So then you went to Hooters in the US, you got impressed, but you went to China, you got impressed even more, and yet you decided to upend yourself from Cook Pine and transplant yourself in Shanghai. Maybe explain that decision in a more nuanced way. Why was that so?
So when I joined Cook Pine, I told H that I have a dream to start my own business. And then I didn't really know what kind of business I wanted to build. But then I had there's something like the entrepreneurship very early on, and it became more clear over time that there's something I want to do in China, and then I saw opportunities in China to build my own business.
Okay.
And I think this is Charlie Manga.
Okay.
Said. I actually didn't realize that was a Charlie Manga because I kept using this.
Okay.
But then, if you're a fisherman, right, you don't want to fish at the pond where there are a lot of fishermen. You want to fish at the pond where there are not many fishermen. But then there's still a lot of fish. Right? And then you certainly don't want to fish at the pond that there's no fish. Right? US is a pond where there are a lot of fishermen.
Yeah.
Japan is a pond where there's no fish. Right? And in China, there are not many fishermen, but then there are a lot of fish. Right? And I don't want to describe the family is like a fish, but it was how I felt.
Yeah,
right?
understand.
And then because people actually probably didn't realize how wealthy China became. And so this is like 2011, 2012. I had a lot of conversation with the Chinese families in US. Right? And then I realized, wow, this could be a very interesting place. And of course, I'm an investment person, right? And then I've never had any business developments and then the sales experiences.
Okay.
But then I just thought maybe I can just give a try.
Okay.
Right? And then see what I can actually do. And coincidentally, my family agreed that maybe we can set up the family office. Right? And then it's too small to be a single family office. But then I thought, okay, well, I can take this money. I can use my family as a guinea pig.
Experiment.
Yeah, and then, but then, you have to eat your own cooking.
Yeah, that's right.
Before
that's
you
right.
serve something to other people.
Yeah.
And then, of course, I believe in this approach, so-called endowment approach.
Yeah.
But then I can probably do it by myself, right? And then maybe I can start a new business. And then so I moved to Hong Kong in 2012.
Yeah.
To start the Magnolia Capital.
So it's actually based out of Hong Kong, but you actually stay in Shanghai. Is that how the structure still is, or have you transplanted the Star Magnolia over to Shanghai as well?
Yeah, so we're still based in the Hong Kong.
Okay.
And then we have an office in Hong Kong, right? And then but then there's not much difference between Hong Kong and mainland China.
Okay.
Well, I consider it's the one big regions. Right? I'm not talking about from the political perspective.
Yes.
But then the Hong Kong is part of this the Greater China the cultural territory. Right? And then for foreigners, it's actually easier to move to Hong Kong and then start something. Right? And then the Hong Kong is still one of the most friendly country or maybe regions for starting a new business.
I see.
China is extremely difficult, right? And so I wouldn't be able to start a new business in Shanghai.
I see. But if you build a track record in Hong Kong, will it be easier for you to open a subsidiary? Does that count for the Chinese government?
So it actually doesn't really matter.
It doesn't really matter, is it?
Yeah.
Okay.
And then in China, the regulation is very ambiguous.
Okay.
Right.
Okay. That's a nice way of putting it. Okay.
Yeah. So, but then as long as you are, you have, the entity in Hong Kong, and then, maybe you can have a license. These days it could be Hong Kong, it could be Singapore, it could be, anywhere, right? But then, so you can run business out of Hong Kong, out of Shanghai,
I see.
or out of somewhere else as well.
Yeah. I'm going to go a little bit deeper into China, and in your blog, you actually expressed that you were quite fascinated with Chinese culture, and you read I think The Romance of Three Kingdoms 20 times or something, if I remember correctly. What is this fascination of yours with the Chinese culture and history comparatively to Japanese culture and Japanese history in a way? Do you see similarities, or do you see nuances that are very, very different?
I think every culture has different history, but then some are similar, right? And then for example, Bridgewater's Ray Dalio, right? People think he is an investor, but then maybe you can consider him as economist, right? But then you can also consider him as a historian as well, right? So he studies the history of economies and then they try to understand the patterns, right? And then so I did the same thing for the many countries, and I try to understand, like for example Malaysia, why Malaysia is Malaysia today. I just went to came back from Malacca, right? And then how Malacca lost its the trading hub status.
That's right.
To Singapore, right? And then it used to be one of the most the prominent the trading hubs, right? And then you can call it it's a history, and then we can forget about it. But then there's economic reasons, right? And then you can also recognize some patterns as well, right? And then China is the same, right? And then it's a very interesting country, and it has a I don't know 4,000, 5,000 years of history. Yeah. And then people lived there for many years. Yeah. And then, but at the same time, they are also rebuilding. They're trying to redefine themselves. So I thought that was a very interesting time to be based in China and then understand what the China is, because obviously, I'm Japanese, right? And then the Japanese culture was, the hugely, influenced by China. Yes. The early days. And then, of course, those Southeast Asian countries, the China's influence is huge. Right? So sometimes it's a good idea to go back to the roots and try to understand yourself. Yes. Or maybe understand the world.
Yeah. So when you planted yourself in China and you notice similarities and differences like what you just mentioned, perhaps you could go into a little bit about Chinese or even the Japanese fatuation for asset classes, especially real estate. Why do you think it's very similar? I think even you come to Malaysia, there's also a very deep rooted belief of real estate as an asset class, and you spoke about the over concentration of that asset class, and maybe go into that nuance of that similarity and why do you think it may not be the best solution?
Oh, I see. Yeah. I shouldn't say it's not the best solutions, right? Because it's a proven asset class, right, for many, many years. Yes. Right? And then if you're talking about the equity, it's pretty new concept. Correct. Right? And then if you're thinking about the private asset positions, or maybe the real estate is one of the most important asset class for the humankind. Right? And then because business, they can exist, but then it's rare to see the business that goes beyond, say, 200 years. Correct. Right. The oldest business, which is in Japan, it's only 1,000 years. Right. But then the real estate, it may last, for many, many years. Right? And of course, you can rebuild those real estate as well. Yeah. I'm not sure if there's any. Maybe probably the Japanese emperor, but then some Japanese families probably own the same land for over maybe 1,000 years. Possible. But then because of this, people we tend to become overconfident and overvalue real estate. I see. Then it's an intrinsic values. Understand. Right? And then with a very unique the economic situations, and then the interest rates and the inflation situations, the real estates tend to become very expensive, right? And then we see the same thing in Hong Kong today, right? And also we saw in Japan in the early 90s or late 80s, and then the real estate became the dominant asset class for the family's portfolios, right? And then one of the big mistakes the Japanese family made was they forgot about the importance of diversifications. They had one asset class in one country, and then when this asset class collapsed, they lost everything. And then I see similar signs in China, even though I was not as pessimistic about the Chinese real estate market as other people. But then I thought it was a very important the warning message that our friends in China should listen. Right? As I mentioned earlier, it's better to learn. It's important to learn learn from the mistakes, but then it's better to learn from other people's mistake. Right? So if the Chinese people can learn from Japanese people's mistake, that's probably good for them.
Better than funding that mistake from their own pocket.
Exactly.
Yeah. And it was a very interesting. So you kind of like contributed to this Harvard Business School paper, which I read like 3-4 times, because there was so much nuance in there. You gave examples of how a lot of these Japanese tycoons and families, they were very concentrated in the Ginza area, some of the world's richest people, and then everything was just lost. Maybe can you give the listeners an aspect of like, was it like 80-90% of their wealth into real estate as a ballpark, or was it that concentrated that actually caused that downturn?
I think it's possible. We don't know for sure.
Okay.
But then I can easily imagine 50, 60, 70% of the wealth was tied up with the real estate.
Okay.
And then there are a lot of mini tycoons all over the countries. And then our neighborhoods, a lot of people who own mountain.
Okay.
With almost no value.
Oh, okay. Right. Yeah. Okay. Do you think that they are starting to wake up from your experience? I mean, managing family offices and all that. Do you think that? But I think before that, maybe can you explain to the listeners who are not familiar with a family office concept? What is the family office, and why is it different from a hedge fund or let's say a private banking service and all that?
Right. I think it's probably better to explain in the context of the differences between family office and the private banks.
Yeah.
Right. And then, so once a family accumulate wealth, you have to manage it.
Yes.
Right. And then otherwise, you ended up investing in one asset class in one country.
Yeah.
Like many Japanese families.
Correct.
So the first step many families do is actually working with private banks.
Yes.
Right. And then private banks establish the status and then reputation as the guardian of the wealth for wealthy families. Right? And that's important, the business to build. Right? But then sometimes you have to ask yourself that are these bankers working for you or working for banks? Right? And then there are a lot of great bankers, but then there are a lot of terrible bankers as well. Right? And then it's not necessarily bankers' fault because it's a commission-based business.
Correct.
Right, and then the bankers have an incentive to generate more commissions by through transactions, right? And then because they have to achieve the scale, right? And then it's easier to sell more cookie-cut products. Right? It's very difficult to customize, right? And then most of the bankers they get the product information from the headquarters, and then they sell. Right? So they're actually glorified version of brokers. Right? They're not really managing. Yeah. They're not even advising. Right? They're just selling. Right? And then if you're smart enough, right? And then if you know all the the issues, then you can actually play with it. Right? But then at some point, some families realize, is that the best way to manage our family money? Right? And then just listening to the bankers, or should we have someone working for the family, right? And then making a judgment on those products and investment opportunities for the families
in an unbiased, unproduct kind of structure.
Right.
Yeah.
Of course, you have to pay them by yourself.
Yes.
Right. And then you don't want to hire someone who get paid by banks. Then they just doesn't make a lot of sense. But then the people start realizing that, hey, that might be the better way of managing the family's money. So that's the one of the reasons why the family office exists.
I see. You saw all that when you were in Cook Pine, right? I mean, was that the first version, or was it more the Melco experience that actually shaped your perception or understanding of the family office concept actually?
So Melco was it was a very unique animal.
Okay.
It was a listed company.
Yeah, correct.
Right? But then almost 50% owned by one family. So it functioned like a family office, right? But then it was not really traditional family office, right? And then it was really after working at the Cook Pine, and then we saw a lot of the family offices, and then how American families manage their money, especially Jewish families.
Yes,
right? They have built a lot of the great the family office,
multi-generational wealth. Yeah,
right?
yeah.
And then they understood very well like how incentive structure works. And then that's very important because you want to hire someone good, but then you also want to have someone who has a very strong alignment of interest with the families. And then and of course you don't want to hire one of the typical mistakes that many Asian families make. They just pick someone just based on trust, and then loyalty. Right? So then say, oh, maybe I can pick my cousins, right? Or maybe I can pick my CFO. I can pick maybe accountants and lawyers. Right? Those are the terrible choices for to manage family offices. Right? And then so we have to learn how to trust non-family members. Right? And then so we always say we don't want to control someone by blood, but we want to control someone by incentives.
Incentives, yes. No, I love it that you brought up this point. And maybe when you say right incentive structures or to create that professionalism culture, perhaps give us an example of what is the right incentive structure and alignment to get that kind of culture.
So it's actually very simple.
Okay.
Right? We have to create the structure that you make money when we make money, you lose money when we lose money. Right? That's the best way. Right? And then of course you have to prevent that from the excessive risk taking as well.
Okay.
Otherwise the people make a crazy bet. Right? And then but then they're making a bet on to make 100 times returns. Right? And then you make 100 investments, none of them make 100 times returns. Then you lose almost everything. Right? And then, but then it's much better to have an incentive structure that if you lose money, if we lose money, you also lose money as well. Right? So that's why I initially said, that's why we're trying to cook our own. We try to eat our own cooking. Right? And then that's something missing. Right? In many industries, the private bankers, they're not going to lose job, right? Even if they sell the bad products, because they're not eating their own cooking.
Correct. And maybe for those listeners who are not from the industry, correct me if I'm wrong, so I'll break it down. Private bankers and all that, they are incentivized based on a salary and bonuses. I think what Shinya and do add on, if I miss something, is that if you were investing as a family office, your own money has to be in the pot. And when you lose money, that means you lose together because you're making decision on behalf of everyone in the partnership, and that's where you feel the pain of the pocket. Did I concise it correctly?
So some differences. Actually, we don't make investment decisions for families.
Okay.
Right, and then we work together and conduct research.
Okay.
But then each family makes the final investment decisions.
I see.
That's important because then they feel ownership. Right. But then the fact that our teams, including myself, we invest our money, right? And then our money is tied up with those investments.
I see.
Right. And then that is critical.
I see. So maybe Shinya, perhaps also for my own clarification, let's just say you have 10 families in this multi-family office, and an investment opportunity by one of the fund manager comes up, right? What if I'm hearing you correctly or understanding this correctly? Out of the 10 families, maybe 8 choose to invest and 2 can actually pull out. Is that the structure of a multi-family office? Did I get this correct?
So there are many different structures, right? And then what Star Magnolia is doing is one of many structures, right? And then so our approach is the families will have an ultimate decision. Then it's up to them whether they want to invest in certain managers.
I see.
Right? Some other multi-family offices, they have more commingled vehicles,
I
or
see.
maybe everybody has to participate.
Okay.
Right? And then, I think there's pros and cons.
Okay.
Right? And then, but we just to feel comfortable with how we do.
So in a way, it's not like somehow some PE or VC, right? It's like fund A, this time period you're in, and then the fund manager has the final decision. So if I'm understanding this correctly, you go and find the best fund managers in the world, and then you give these families, hey, this is my due diligence, this is some kind of report, do you want to invest together with me with this fund manager? Is that how it works?
Yeah.
Okay.
So we're actually very picky about what kind of families we want to work with.
Mm-hmm.
Right? And then the reason is we don't want to change our investment style and the philosophy because of the families.
Mm-hmm.
Right? And then it should be very homogeneous, the culture, even though different families. They have to believe in this, the Star Magnolia way of investing.
Understood.
Right? And then only if they agree, then they're welcome.
I see. If you were to indulge me on the capital structure or the incentive structure, so if let's just say I was one of the family who wants to be part of an LP for Star Magnolia, I'm very sure it will come across this thought, why don't I just go to that fund manager directly rather than going through Star Magnolia? And I'm pretty sure you've seen these kind of scenarios. How is that incentive structure allowing both Star Magnolia to earn something because you definitely spend man hours, research time to find the fund managers? And what is the take for the fund manager that you're giving money to? Perhaps can you explain that kind of flow? Roughly what kind of percentage? What's the cut? Because obviously you and I, we had this prior discussion. Fees are something that you want to avoid as, reasonable fees. Not to say you don't want to pay fees, reasonable fees. But how is this incentivized for both the multifamily office as well as the fund manager?
So the why family choose multifamily office is because it's cheap. Right? And then it's cheaper than hiring your own, building your own team. If you want to build the same type of the teams, the research team, it's actually quite expensive. Right? But then the benefit of multi-firm office is you share the cost. Right? And then you don't have to manage the team. It's a hustle.
Correct.
Right? And then you don't want to meet a lot of managers on a day-to-day. Like I call the family offices are usually the fat, lazy, and stupid. Right? We also family offices. Right? That's why we invest in managers who work very hard.
Hustle really hard. Yeah.
Right? And then but then it's very difficult for any single family office to hire investment professionals. Right? Because we're very stingy.
Understand.
We don't want to pay much.
Understand.
Right? But then if you can share the cost with some other families, that sounds pretty good.
Yeah.
Right? So,
but then the hiring decisions will still be back to you in a way. The family officers that become your LP will have to trust your hiring decisions, the way you operationalize the thing and all that, right?
I think it's case by case.
Okay.
Right? And then, for example, if the family members want to work with us, then that's possible. Right? And then we can actually operate. Of course, we might say no to the families. Like, hey, this guy's lazy.
Yeah,
and then I want to work with them. I'll probably say no.
Okay.
Right? But then I think that the kind of a scenario is the possible as well. And then the hiring decisions. Of course, the team has to have the same culture.
Yeah.
Right? And then I don't think the families will have a lot of influence. But then we are kind of extended families. Once they join our platforms, and then we should tell what we think we should do. Right?
Have you? I'm pretty sure you had to go through this experience. Some family come to you and you rejected them.
Sure. Yeah.
Yeah. What were the common reasons why they were not included? Just
of course, I don't say no. Front, right? But then we just say, well, it's probably not a good cultural fit.
I see.
And then what you're looking for is different from what we're looking for.
Usually, is it time horizon or is it investment style, investment philosophy? What is it?
It's always very different.
I see.
Right? And then time horizon is very different. Right? And then we're very extremely long term.
Okay.
We're thinking about 10, 20, 30 years. Right? Most of people thinking about weeks and months and years.
Yeah.
And then
they won the alpha yesterday, right?
And then the risks, right? And then they don't want to lose money. Right? Of course, we don't want to lose money, but then we don't mind, the losing money on a mark-to-market basis.
Correct.
Mark-to-market basis. But then some families, they don't want to see the volatility of the portfolios. Then that's not what we believe, right? Because we think the volatility is just
part of the game.
Noise.
Yeah, it's part of the game. Yeah. Looking at your paper again, the Harvard Business School paper, you said becoming experts in finding experts. I see similarities, but do correct me if I'm wrong, in between, like a fund manager's role is finding a good business owner, entrepreneur, doing on-the-ground due diligence, reading annual reports. Will the same methodology apply to you guys? How do you first filter fund managers? And then secondly, what are the criteria you look for a good or, mistakes that you made as, hiring bad managers? Maybe you can start with that.
Yeah. So I want to correct what the Professor Cohen wrote.
Okay.
And it's not wrong, but then I think he was too nice.
Okay.
Right? Because I actually told him we are expert of nothing.
Okay.
Right? And then he said, it's an expert of finding experts.
Yeah.
Okay, thank you. And it sounds better.
Yeah.
But then in reality, I think it's very important for us to know that we do not know everything. We have limitations of knowing and understanding. And then, of course, our time is limited. They're only 24 hours a day.
Yeah.
Right. And then, but anyway, so your question was how to find the good managers.
Yeah, how to find.
Right,
what's your filtration process? What's your,
Yeah, so I think I mentioned earlier, we want to find good, we want to find the good people running a good business.
Yes.
Right. And then the question is what defines good.
Yeah.
Right. And then what's important here is we're not necessarily looking for intelligent people, most intelligent people. Right. And then we're looking for someone more, patient, and then they're thoughtful. Right. Because I have a belief that investing shouldn't be extremely complicated. Right? And then if you are investing in the right companies, for example, right, and then at the right price, right, most likely you'll probably lose money in the short run, but then you probably make money in the long run. Right? So the patience actually matters. I think the patience is the most important factor for risk management. Right. And then, of course, sometimes we have to say, well, we became too patient, right? And then the managers or investment, the managers, they have to adapt and they have to evolve, right? Because market conditions may change.
Yeah.
Right? And then sometimes you're stuck in, one country, one ideas, and then they don't want to move. Right? And then that could be a mistake.
I see.
As well.
I see.
The biggest challenges for us is these are the human factors, right? And then the people also change over time. We're looking at the smaller managers in terms of AUM, right? And then we consider $1 billion is too big, right? And then sometimes the smallest managers we're looking at, it's maybe they have zero assets, right? And then or maybe 10, 15, 20 million dollars. We look at a lot of managers who manage like $100 million as well. Right? And then we ask them, we hope our managers will have a lot of skin in the game, right? And then, but then they have money, but then they choose to manage the smaller asset base.
I see.
Right? Which is good because they will make money on performance, not the management fees.
Correct.
And then, but then once they grow, once they become successful, they change.
The hunger is no longer there.
Right.
Probably the hustle is like they delegate it too down and they don't guide the next team to like. Why do you think is that so? I think my guess is probably money changes people. But secondly, is it like it's because they grow too big that they may still be interested in investing, but it just becomes too big that it's a monster that they can't really manage?
So it's a human nature.
Okay.
And then, the people always want to grow and the money is a bigger influence. And then, so I think we are fighting against this, human nature.
I understand.
And then it's just like operations.
Yeah.
I mentioned that operation is something like, you need it to prevent yourself from doing something wrong.
Yeah.
And then the great managers, they actually set some rules ahead of the time. Right? And then, for example, Richard Lawrence at the Overlook.
Yes.
He's managing money. He started his own the asset management companies in 1991. I think this is 30 plus years, and then generated amazing returns. And what is great about his investment is the capital weighted returns and time weighted returns are same.
Yes.
Right? Because most of the managers, they generate better returns, much better returns in the early days than later days.
Correct.
And then, but in case of Richard, it's almost exactly the same.
Yeah.
Right? And then he has this concept of the cap on subscriptions.
Yes.
He's not really getting a new money, but he actually eager to return capital to investors so that he can manage his platform and asset base.
Yeah.
I think that's a secret sauce.
Yes.
Of success, and then we want to find those managers. But then the mistake we make is, 20, 30 years is a pretty long time.
Yeah.
For the human, the life, and then it's very difficult to predict what is going to happen. I don't even know, clearly what I would do 20 years from now.
Correct.
So how can I tell other people? But then that's something we have to try. And then if we can find some young talents and then work together for the next 20 years and then say, wow, you haven't changed. I mean, of course they will change. But then, the core part, if they don't change, then I feel like, wow, probably did a very good job, making judgment on people.
Great. Very good segue to Z Club. So I think the consensus of what you're trying to tell me is that try to find young, hungry managers, try to find them young. And you went, in a way, I keep on joking to people when I introduce you, it's like you go all the way upstream, which is you go straight to the universities and even encourage that. Maybe share your story about how you looked at Jewish families and their relationship with money. You saw a gap, and then you saw how you found an idea of how to actually encourage or even open the world of investment to younger people in relation to finding and encouraging people to come into this industry.
So the biggest risk for family offices is actually not investment or portfolios. The biggest risk is actually ourselves. And then we're not very good at managing our own family members. If you look at the Asian families, there's always brothers, sisters, infights. Right? And then when father dies, brothers fight. Right? And then the second generation is difficult to manage. Third generation is even worse. Right? And then they were born with the silver spoon in their mouth, and then it's very easy to be spoiled. Right? And then, so how can we actually control this? That was something I kept thinking when I was at Cook Pine, and then observed the Jewish families actually did a very good job. They're educating their next generations on money very early on. And then, especially in Japan and in some part of the Asia, we don't want to talk about money with family members.
Yeah, it's taboo in a way.
And then, but it shouldn't be. Right? And then we shouldn't talk like, oh, we are so rich and we can do anything, we can be lazy. That's not good. Right? But then how to deal with money, I think this is it's a job for the parents, or maybe family members to teach their kids, but then we're not very good at it, right? And then when it comes to family office, that's one of the biggest risks, how to deal with these problems. And then so my family had issues as well, and then, I didn't know how to fix it until I found a manga, which is a Japanese cartoon or comic books, and then about investing, and then these comic books about investing actually save our families. And then now my sister is, she started investing at the age of 33 or 34. Before that, she has no interest. And I thought, wow, this model might work very well for other families. And then it probably doesn't work for the US families, but then the Asian families, Asian kids love anime and then, the manga. So we don't have to make everything so serious.
Yeah.
We just have to make it easy for them to start, and then maybe we can brainwash, right? So that's how, and that's why we start creating this manga, right? And then so my partner Tiffany, she's also working at the family office now, but then she came up with the idea of why don't we create an investment club, because after reading manga, people still don't take actions.
Yeah.
Right?
How do you apply all this concept?
Yeah,
right?
yeah, exactly.
Yeah.
And then after the watching Slam Dunk, a lot of people want to start the playing basketball.
Correct.
Right, and then just like that, sometimes good contents will make people feel like, I want to start something. So so that's why we started investment club, and then I also realized some gap, and then in the industry as well, and when many people start investing, they start to focus on trading, right? To focus on charts and how to make a short-term money, right? And then everybody has to go through this process we call investor's journey, and then they have to do a step-by-step. You cannot skip this investor's journey, but then we can actually bring the long-term concepts very early on, and then it's actually a repeat, or maybe what exactly my first boss did to me at the Melco. He introduced me to those investors.
Yes.
Right, and then the hedge funds.
Yes.
And also the fraudulent managers of
Melco.
But then, I actually had a very good meetings with those the great investors, and I learned quite a bit because it was quite eye-opening. Right? And then so instead of putting myself, putting the kids or next generations in the closed world, right? They can actually, we can actually help them to see the world, right? And then, give, letting them know there's a possibility, for the different futures.
Correct.
Right. So that's why we started the Z Club. Right now, it's a part of a non-profit organization called Next Gen Investors Endowments.
Okay.
And we have the funding of about $200,000-$300,000.
Okay.
And then the students, they manage these portfolios.
Okay.
And then
it's not a simulated portfolio; it's real money.
It's
right?
real money.
Yeah.
Yeah. And then the purpose of this foundation is to provide the scholarship. Right. So the students have a mission to generate returns, and then they don't get paid, but then they make a positive contribution to the societies. They can be a part of this.
Great.
And then at the same time, they can learn how to invest. And then it's actually a very good platform for them to know, the potential employers. So because of the platform, the handful of the students actually found a job. Otherwise, they probably didn't. Ended up finding those jobs.
Yeah. No, I love what you're doing because I'm actually training 2 interns now to do research. What is the meaning of crunching data and all that kind of thing. And obviously I can't pay them, but I think they enjoy it because it's a mutual gain for both parties in doing research. And I love that you scaled this concept in a way.
Yeah, we have a lot of Malaysian students in the club as well.
Yeah.
So they're very, very proud of. And then it's a very exciting journey because I don't consider I'm teaching, right? But then I'm working with them,
facilitating their learning. Yeah.
And then the conversation with students gives me a lot of new ideas. And then some students are really good, and then they give me a lot of the new insights and ideas. So it's actually it really helps me to expand network.
Yeah. Do you like kind of reach a point where, oh my God, these are so good talent, but then because they are so good, they get poached by JP Morgans or the Black Rocks, and then you don't get to hire them in your family office? Is that a tinge of regret, or do you feel that you're even more proud because they're hired by JP Morgan?
Yeah, so we're not trying to hire them for family office.
Yeah.
Right? And then maybe they, after having a lot of experiences, they can come back and then convince me like, hey, I'm managing this the fund. Then I'm happy to consider, right? And then but then it takes years before they become they're sophisticated enough.
Understand.
Right? And they have to go through the many different paths.
Correct. They need to go through that baptism in a way of fire. Yes. So I want to touch a little bit. I'm very conscious of time, but I want to touch this experience that I think you shared about meeting David Tepper and then realizing you were not David Tepper, and realizing that that's why you focus on finding experts. So perhaps you can indulge the audience about your experience with David Tepper so that they get the context. Yeah.
Of course.
Yeah.
So maybe some people probably do not know who David Tepper is.
Yes.
Right? And then he's a very well-regarded hedge fund manager in the United States. He started his career, I think, at the Goldman Sachs.
Yeah.
And then he set up now it's called Special Situation Desk, but then it's a predecessor of this, the unique prop desk operations.
Yes. Yeah.
And then he was very successful, and he launched his own fund. It's called Apollosa. And then the Apollosa was known for extremely high volatility, but then good performance as well. Today, he retired, and then I think he's managing his own money. He's not as rich as Warren Buffett, but I think it's probably $20-30 billion. Very rich guy.
Yeah.
I had the opportunity to meet him twice in 2009 and 2010. Right? And then just going back the time, and then 2008 in United States, we had a massive financial crisis.
Yeah.
And then it was an interesting time for the many people, the younger investors, including myself. It was literally like my first crisis. Right? And then the previous one from 2000 to 2003, I was still in school. So I just didn't feel it. And then the 2008, I felt the world was collapsing. Right? Luckily, we made a lot of money on the subprime shorts. So it was very profitable 2007. But in 2008 was a tough time. Right? We were watching the CNBC or Bloomberg every day, and then it seems like the world is not functioning, and then the government is not able to do anything. And what I thought is the robust system was no longer there. Right? So I kept reading the Bridgewater's, the very famous daily observations. That was like, my last hope. Right? And I said, I know what's going on. And then, but anyway, I came back from Mexico. Okay. The early 2009. That was a vacation I took for the first time, probably in many years. And then I felt a little bit better about the world. Right? And then when I was traveling in Mexico for 2 weeks, no TV, no Bloombergs, and then
disconnection.
I realized life goes on. People live there, like as if when I was in New York, everybody's talking about this financial crisis. Of course, I'll be nervous. Yeah. But then this disconnect actually helped me to to become sane again, right? And then to focus on what really matters. So I had a meeting with David Tepper. We had a client who had the exposure to David Tepper, and then he wanted us to meet, and then during the meetings, and we asked him like, so what do you own? Right? And he said, I own AIG, which is the largest insurance company, which the collapsed, and then Citigroup, which was trading below $1. The share price was more than 90%. And then Wachovia, which is a bank doesn't exist anymore. But then it was a very the large the commercial banks in US, and then there are a lot of mortgage, the government agencies called Freddie and
Freddie Mac.
And then those companies, the equity and then convertible bonds, and then he's buying at maybe 10 cents on the dollar, maybe 5 cents on the dollar. And then I said, these companies are bankrupt, or maybe it's going to disappear. Aren't you worried? And he said, no, because I understand the government, right? And then I understand the government incentives, because it's too stupid for the government to let those financial system collapse. They still have enough firepower, right? And then for me, it's very rational to invest in those banks, because as long as the system doesn't collapse,
correct,
they will stay, and they will make a lot of money. And then I thought, okay, that's so very logical. I don't think that the U.S. government is bankrupt. They can save the system. Of course, there's a lot of political struggles, right? And then we don't know, what exactly happening behind the scene, the closed door. Right? But then I wasn't convinced that the system, the government will let the system collapse completely. Right? And then I think if that's true, then those are great investments.
I see.
That's a very simple logic. Right? But then I also realized I wouldn't be able to do it. Right? I couldn't trust my own judgment. Right? And then maybe because it's not my own ideas. Right? Maybe it's a David Tepper's. But then I also realized that maybe I probably feel uncomfortable taking this kind of risks. Right? And then it's a little bit somewhat binary. Right? And then I realized I feel a lot more comfortable maybe investing in David Tepper than managing the money by myself. Right? So back then I was, of course, asking myself, can we actually manage, the money, just like a hedge fund? Am I better, or are they better than me? Right? But then that was the moment I realized I actually feel comfortable to be an allocator, not the investment manager. Right? And then I probably do much better job being an allocator than investment manager by myself.
Understood.
So that was like the aha moments, and I can be who I am. That was probably the moment I found out myself.
Understood. And I think it was kind of an enlightening moment, because a part of us, there's some ego to say that I'm quite good, I can understand, but also a part of us have to realize our own limitations. And I think that was an aha moment for you, right? Great. Probably one last question, and obviously this is not going to be the last, as I mentioned before the podcast. I want you to come back to talk more about the Z Club, because I think especially not just in Malaysia but a lot more places, people don't know this world. I mean, I was new to this world, and you had mentors that opened that door. But probably my last question would be, what's the most meaningful thing when you started this family office, this Z Club, for you emotionally? What besides making money, besides helping other families make money, but your conviction or whatever, what was that most emotional moment for you? If there's an instance or there's other examples of, So
I'm very curious.
Okay.
if it's not too arrogant to say, but then I'm intellectually curious, right? And then I love knowing what's going on in the world, right? And then that's why they study economics. I still feel like I'm a student of economics, right? And then my probably lifelong goal, which I'm not gonna be able to achieve, is the finding out the truth of this world's the economies, right? And then I'm happy to pursue this path, right? The reason I'm doing this, running a family office, is this gives me a platform to achieve this goal, right? And then I enjoy what I'm doing, and then I don't think it's a job; it's my passion, right? And then I just feel very privileged and then lucky that I can actually keep doing this because I'm able to speak to almost some of the smartest people in the world, right? And then we can reach out and discuss. Then they may not be the smart, the most famous people, right? But then being famous doesn't mean they're smart or maybe knowledgeable,
yeah.
Right? And then, but then they are those very interesting people within reach,
yeah.
Right? And then by doing this, by generating the returns, it provides me the place where I can devote myself and then enjoy. So this is great, right? Because I don't feel it's a job. I don't feel any pain. So I can keep doing this, and then I understand why Buffett is still investing at the age of 90 something.
Yeah,
right?
yeah.
I'm happy to do this until I die.
Yeah, yeah.
Right? Or maybe even after I die, I can create my own AI and then keep doing this.
So the Shinya AI is still running, and I'll go to invest, right?
That's terrible. But then, I love this, right? And then it's very intellectually challenging, and then, but then. I can find out something new every day. I can visit many different places and countries, and then learn something new. And for me, everybody has a the suitable job.
Yeah.
But then for me, this is the perfect.
Got it. Shinya, thank you so much for spending time with me. Definitely broaden my own insights, my perspective, and my horizon. Probably a wish for the Malaysian market since you're in KL and you travel quite frequently here. What do you think the capital market should be doing in Malaysia to encourage better investments?
So I met many amazing long-term investors in Malaysia. And then maybe I'm less familiar with Malaysian capital markets, right? But then the Malaysian people are very talented, and then I think the young Malaysian the people have a lot of potential, right? And then they don't have to limit themselves in Malaysia, like I guess the whole Southeast Asia is. Within their reach, and then they can always go to China, Japan, US, right? And then I think the language is a very the very important strength. Right? A lot of Malaysian the kids speak not only Malay but then the Chinese, English quite fluently.
Yeah.
Right? They compared to Japanese, who only speak Japanese. Right? That's a huge advantage. Right? And then. Just to broaden your eyes and then scopes and then reach out and then just they get the long-term perspectives, and then I think the Malaysia will be a very the exciting foundations for the future. Great.
Thank you again so much for your time. I'm already publicly extending an invite to you to come again when Z Club has more interesting milestones this year. Looking forward to it. And a safe trip back to your next destination, actually.
Yeah, thank you. And then they will definitely come back very soon to have to continue these discussions. And thank you for these great opportunities.
Thank you, Shinya. I hope you have enjoyed my conversation with Shinya and broadened your perspective on the role of multi-family office. If you enjoy content like this, subscribe to the channel and hit that like button so the YouTube algo can forward it to more like-minded individuals like you. Don't forget to hit that notification bell so that you'll be alerted when new videos are out. See you in the next video.